massive hello to everybody. Hope we're all having a great day. This is 50 pips 2610-2014. Not making any trade calls or recommendations because you and only you're responsible for the trades you may decide to take, and the fact that you're in here means you've read to understand you accept all the disclaimers here on the website and everywhere else, understanding that we're performing some live technical analysis in a learning context for educational purposes only. Okay guys, how are we doing? Hope everybody's having an awesome weekend. Keep in mind that we've had basically UK, Central Europe time change, so that's going to probably throw a lot of people off. The US is not going to change for another week or so, so keep that in mind. Now, what's going on? We're going into a very interesting week, right? So we'll start. We've had those bank stress tests out. We'll have to see how the market opens, but again, I don't think we're going to see a lot of wheeling and dealing there. No huge surprise as far as I can see, but I haven't really checked the info that much. Now, Monday, we've got the German IFO, which is going to be interesting. We got some other data. Tuesday, we got some core durable goods out of the US, but really this week is all about Wednesday, right? On Wednesday, we've got the FOMC statement. So basically, this is going to be really, really important. A lot of people waiting for this, so I really think that's the main event risk for the week. On top of it, we've got the RBNZ following that with a rate statement, and we've also got the BOC on the wire. So that's going to be really interesting. I mean, then we've got Thursday, we do have some more German data. We've got unemployment claims. We're going to have Yellen speaking. We have some stuff on Friday, but really, it's all about Wednesday. So remember, what have we learned from the FOMC this year? How to trade those? What have the moves been? Study the past reactions. We've had pretty classical moves on all the FOMCs and post FOMCs, with market not being able to hold the big moves they've put in on the FOMC. So it's going to be very interesting to see how that plays out. So decided to focus mainly on to just do Forex one today because we haven't done only Forex for a while. So what's going on yen? So USD JPY, so we had a very pure move here, right? We talked about basically when we're talking on this monthly chart, and basically we're talking about the fact that we're looking for this to continue to grind high. We've got targets possibly all the way into 120s. And what we talked about was once we broke outside this descending trend line and this whole support zone, we said, this heads up on the retest, because don't get long at highs. Let the market comes to you. Most likely, if this is going to be a good technical move, we'll wait for the move back into the retest of the trend line. Previous resistance acting as support, the confluence of this trend line. And on top of it, what do we have also? By the way, look at the monthly, it's starting to look pretty nice. What do we have is we have the confluence also of the 50 back of that move from this range low all the way into the high. So we had three things. We had the descending trend line, which previous resistance, now support. We have previous resistance acting as support, and we have the 50 back. So very pure little setup here, right? So very nice trade. Holding that, held that to the pip pretty much. Very nice move, and it's trying to press again in extensions higher. Now, what's going to be very interesting is how are we going to react? Are we going to go straight through those highs or not? Right? You have, no matter what happens, even though this is likely to stay bit, you have to respect those highs. So keep in mind that on any press higher, the fight is going to be to the upside. If we take out those highs, the next level we're going to be looking at is straight into those 111, 112 levels. And again, it could be very whippy this week, especially with that FOMC, but it's a nice little move. Right now it looks like there's not a lot holding it all the way for a move all the way back into those highs. So we'll have to see how this trades, but very pure setup, very classical example of let the market come to you. Don't chase highs. Markets can be healthy and tend to be healthy. Wait for the healthy retracement. Don't get long highs. Now, here we had very choppy action, in Euro JPY. We had this aggressive breakdown below this, so that zone that we'd holding for a long time, and then we had a very aggressive close on the daily here, right? We got that candle which printed basically all the way down to 134.09s and then ended up closing at 136.13, 136.14. So very aggressive, so once you see these kind of candles, they're always a bit tricky because there's fairly good chance that we've put in a low and we're going to try and break higher, go back to the 138s, 130 38.90, but they're tricky to trade because if you really have to trade them with a safe stop, you're talking about very wide stops, right? You still have risk reward for the moves, but not everybody has that kind of appetite, right? So even if you were getting long after that with stops below those lows, you see for the move back down, back up, you don't really have a 1 to 2 all the way back into this resistance. So they're tricky. I mean, you can find different ways of entering here, trying to get a tighter stop, right? To make sure you have, at least we like to have 1 to 2 into that base first block of resistance. But it is what it is, but it still looks like it's trying to coil higher. Right now it's trading about 137.25, so it looks like we're opening up a bit higher, and I'll probably try to make a stab at those highs. And again, we have to respect the resistance the same way we discussed about on the yen, right? And you see the same kind of action across the board. I don't want to go through all the charts, but same kind of action on CHF JPY. Bam, looks like, see if this can get some traction for another move. We had a very nice move here. This is a false break, and then it looks like it might try and take another stab to the upside. GPB JPY also pressing higher. It's pretty much the same action across the board. Now what's going on Kiwi? Kiwi is it was trying to hold a nice little pattern there, trying to break back up. We're looking for it to move back into the 80.50s, right? If you look at it on the daily, basically it's just trying to base, or on the weekly, at this very, very key level, right? And right now it's slowly trying to make its way back up, and it suffered a bit of a hiccup right when it got sold. And here it's all and only about Wednesday on the RBNZ rate statement, right? See what happens. If they're going to talk about still hawkish or dovish on the rates, that's pretty much what's going to drive this. Now the big question for me going into the week is this a false break or not? I think this is a classical case of this is extremely choppy inside this whole lower range where it's trying to base, and whatever happens inside this range doesn't awfully mean a lot, right? I'll add something else. For this to be bearish, we need to get a daily close below those, right, to get some more bearish Momo. But equally, even if we break above here, see how we failed to hold, we really need to get back above this level, right? So I think for this to be pressure off, we need to move quite a lot to the upside, and equally we've got some room to travel to the downside to be pressure back on. So right now this whole zone could be very, very tricky to trade, and what I suspect is most of the players, or the bigger players, have already made their bets, right? They've already made a bet whether looking for this to go back higher or back lower. And what that likely means, that a lot of the bigger stops are sitting outside of this range, and that's why we're getting a lot of whippy action, because there's not a lot of people engaging inside. It might be some retail engaging, but the bigger players have already made their bets either for the short side or the long side. So what I'll be looking at going into the week is how we behave here. Again, any break here, any move lower, unless it breaks, could easily retrace all the way back into these 79.30s, and any pop here, unless we start to get traction above, could easily come back right into midpoint. So look at this whole area, as we've talked, these 79.30s to be pivotal for action, at least short term, and those wider ranges to be more important in terms of pivotal action at the end of the week, or at least post that Wednesday, right? And expect Wednesday to see a lot of wheeling and dealing. What does that mean for, let's go, since we're talking about the commodity currencies, what that means about for Aussie. Aussie, again, I think, you can make a case for the short side, you can make a case for the long side. Right here, the way we're looking at it is we're looking for this to put in some kind of basing action, and we're still looking for this to move back into the 88.80s. Right here, this whole 87.70s is a pivotal area, right? And we'll have to see how it behaves. But you see how much chop, and it's the same thing with Kiwi. It's frustrating, but a lot of people are saying, oh, you haven't been very active on Twitter, or you haven't updated the charts. Well, there's not a lot to update, right? I'd love to update charts, but since the beginning of October, we came down. We're putting at a series of higher highs. Here we're still making higher lows, and we're still making lower highs. And here we're just chopping around it. So unless we get some kind of a break back below here and some traction, unless we get a break back above here and get some traction, this is just chop, right? and you gotta let the market do its thing. You can't force it. The market doesn't care. You can't force it. You just have to be patient. You have to let it play out. The last one in terms of the commodity currencies, which I've been talking about for a while, and I think is really interesting, is CAD, and I'll be looking at this on the monthly, right, just to give a slightly different perspective to what people might be looking at. So I think it would be healthy to see some kind of retracement here, and I think really the key is on this whole level right here on this monthly. Like look at how we close, right? If we continue to close above, we could continue to see a grind higher, and some of that grind higher pain action where the market really doesn't do anything. It doesn't get any retracement. It just keeps on slowly feeling comfortable, gaining some strength with sideways action, then slowly grinding higher, slowly grinding higher, slowly grinding higher. However, if we start to get a negative close on the monthly and we close back below there, then I think it would be time to see a healthy retracement, possibly all the way back down even into the 1010s, 109s, fairly decent retracement. Again, here we're looking at a monthly, so the levels are pretty wide, right? And we'll have to see where that is. Maybe even you could see there's room to come down, right, and still hold this uptrend. So and a lot of the clues, and a very tradable chart last week is on the daily, right? You see what's happened here. We put in this this negative daily close, right? The market tried to break above here, couldn't get any traction. This is our line on the monthly, right? Tried to break above, couldn't get any traction. Bam, aggressive, and then bam, the sellers came in. And you see what's happening after that. It's really struggled to get traction, right? It's really struggled to get traction, and it's trying to base here. So I think that's why it's a lot of choppy action here. The same that we've seen on Euro, the same that we've seen on cable, the same that we've seen on well, not so much on cable maybe, but on Aussie and Kiwi. We're just chopping in these broader ranges, and we need to get some kind of catalyst. We need to get some bigger break outside of these ranges to see more of a move, right? But for now, you just have to be patient. But again, the chart I'd be focusing on here is the level on the monthly, okay? So speaking about Euro and cable, what's been going on Euro and cable? So first of all, looking at the weekly charts, as we said, much to do about nothing. We've been talking about this for weeks, right? And we've got our blue shaded area, and we said as long as we're inside this range, 2780s, 2460s, much to do about nothing. It's whippy. It could move very, very quick, but it doesn't mean a lot, because most likely what we need to see is a weekly close outside this range to see more Momo. A lot of people saying that's a wide range. Well, unfortunately, we don't make the ranges. The market makes the ranges, right? And you see how whippy it's been, and it's still inside this range. So as long as it's signed here on the weekly, not a lot has changed. If we get a close back above the 2780s, then we could easily see a move back into the 130 level. If we get a weekly close below the 124.60s, then I think it's going to potentially accelerate very aggressively to the downside, all the way down towards those 120s attracting, right? However, in terms of the shorter term momentum, what we talked about, and I've been trying to post these charts on the blog. I posted the right here, right now chart, and basically you see what's happening. It looks like it's trying to rotate back to the upside. It's still got a bit of choppy action, but right here, towards the end of the week, it made this last attempt to break lower, and here it's held, right? It held right in this nice little support base that it put in before earlier, and it's trying to rotate higher. So the way I'm looking at this here, as long as it's holding this, I'm looking for this to try and move back and test those 127s early in the week, right? Early on Monday, most likely. And then that's going to be the pivotal level for the week. If we can't get any traction above, then we might see these lows come into question again, try to be tested. But if we can clear that quickly, then I would not be surprised to see us getting some acceleration to the upside as more shorts cover, as all the people that was trying to hold short over the weekend with these bank tests looking for a gap down, aggressive action down to the downside, they're not getting there. I wouldn't be surprised to see some covering. So look at that 127 at least to be the pivotal level for Momo and flows going into the week, going into Monday trade, or Sunday night trade, I should say. In terms of the weekly on cable, again, we talked about this level on cable. We talked about basically the fact that we shouldn't get too excited about any break back below those 159.50s. We're expecting that 159.50 to get taken out, and we said it's all about how we hold there. If we hold below, then we expect to see the 157s come quickly. If we can't hold below, we close the days and the weeks back above, then we're looking for 163s. So right here, sorry, there's no change in action. As long as we're holding here, we're looking for this to try and make a move back into the 163. Keep in mind, this is a huge choppy range. It can move very quickly, but it's still holding those two moving averages on the weekly. It still looks like it's got some room to the upside. You know, there's going to be a lot of event risk, a lot of stuff on the wires, but, you know, this is the other chart I posted right here, right now on cable. And you see it tried to hold this on the first move, it tried to hold this 50 back. It couldn't get any traction. We got some wheeling and dealing on data, but then that 61 held pretty much to the pip. And right now, as long as that holds, for us, we're looking for a rotation back higher into those 163s. Going into the week early, look at this top side here. If sellers can come in, try to press this. Most likely they'll be trading with stops above that level. Then look for those lows to get tested again, that whole 50-61% area to get tested again. If they can't hold it back early in the week, then I would expect at least the 161.80s test to come relatively quickly. Okay, so guys, try to do a little bit more focus on the forex pairs. I hope that was interesting. Again, keep it tight this week. There's going to be a lot of event risk. Don't be in a hurry to trade. It's really all about the Wednesday, right? All about the Wednesday. Let the market come to you. Don't fire off all your bullets early. Keep some powder dry. Keep it tight. Let's see what happens. And again, don't forget, it's also the last week of the month, the last trading week of the month. Okay, so guys, thanks for listening. Have an awesome rest of the weekend wherever you may be, or however much of that weekend may be left. And I'll see you guys for London Open. Have an awesome one. Thanks for listening. Bye bye, guys.